This is a risk disclaimer. Trading any financial instrument involves a risk of capital loss. This stream is only for educational purposes and not investment advice. So try not to fuck it up. Past performance is not indicative of future results, and personal results in general are difficult to replicate. If you decide to watch, follow, and you screw up, you can only blame yourself. And now, click on the like and subscribe button. Thank you for watching.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Good afternoon, people. Can you hear me?
Yes.
Hello. Perfect.
Yes.
How is everyone today?
Great,
Cool.
great, good.
Good. Market was really slow this morning, wasn't it?
Yeah, just started not to move.
Yeah. US is waking up, so we have more and more volatility coming to the market. So, I sent out pretty much new analysis this morning because only on gold, you know the drill. Let me just delete the screen so not to confuse everyone who's watching the YouTube. We had many interesting things last week on financial markets, but we discussed in the morning briefing about what's happening with the inflation. Now there's huge pressure on Jay Powell to act and communicate properly because inflation hits, 4 decades high, which is ridiculous in the US, but inflation is all around us. So there's a huge pressure on the Fed, but also, some naysayers say that they shouldn't act aggressively against inflation because they already started withdrawing, quantitative easing from the markets, i.e. reducing the money supply, which means that an aggressive rate hike, for example, 0.5 percentage point equals to 50 basis point, which is above the standard interest rate increase, would affect the markets. And we expect, and the Fed expecting, an economic slowdown in 2022, and heading this with an interest rate increase would definitely put some pressure on the economy, and it would push into a recession or a crisis. But traders are betting that the Fed is definitely going to increase interest rates in March, but some people say the emergency meeting today is about increasing the interest rate earlier than expected. Now that definitely would shock the markets. I think that would be bearish for gold. But again, if you look on the news in Financial Times or any reliable news sources, you can see what's happening between Russia and Ukraine. That was one of the catalysts which pushed up gold on Friday. The news came out that the US would Russia would invade Ukraine, which sent gold all the way up to 1865. Yes, just at 1865. But we didn't have any communication yet officially from the White House today, so we're still waiting, and that is one of the reasons I do not want to trade today, because we do not have control over geopolitical tensions, geopolitical news, and whatever is happening in politics. US 30 hit the sell target, but I don't want to take any positions today because last week. How was last week? Was it good, profit-wise?
Yeah, on US 30 was okay. Turned out good for me.
Yeah. Last week we smashed gold.
Yeah.
I mean, most of the
Yeah.
positions they took, or he'd take profit. Even it went beyond to 1865. I had one losing positions on gold. On Friday I wanted to short it, but then I said no, that's enough. I mean, come on, trading during political news is just not wise. So this week the focus is on gold and US 30. I will try to do some analysis on currency pairs, but I'm more confident on gold and US 30 because we know exactly what's going to happen with gold if the Fed is acting against inflation, and we also know what's going to happen with US 30. With currency pairs it's a bit more difficult because if we have a rate hike in Europe or anywhere else in the world, Japan, etc., or they have any monetary policy news, you have to add this into the equation. There's way too many things to focus on. So I thought this week I'm going to be focusing on, two of my favorites, gold and US 30. What is your opinion? Wow, you guys are quiet today. Wakey.
Yes, that's right, Thomas. That's correct.
No, I
Thank you.
agree with you, Thomas. I think, like you said, the rest of the forex markets are very choppy and are sort of so changing at the moment. I think concentrating on two areas which are you have more understanding or we have more understanding of, I think is much better.
Yeah, that said, I'm really tempted to place a sell on US 30, but I'm just going to observe. The maximum I'm going to place is maybe one lot, but no more. I want to see how the market is going to react to the news which came out on Friday. Market is still digesting everything that happened on Friday, so it's uncertain times. Let's have a look what's happening on YouTube. So we have 83 viewers on YouTube, but we only have 31 likes. So please somebody tell me what is happening, because according to my calculations 49 people didn't hit the like, which is not good. So please, if you're watching the YouTube stream, smash the like for me. Thank you. And back to the Zoom. So guys, did you trade anything today?
Hi, Thomas. This is Steve Pelletier.
Hello.
Hello. I'm still in on gold at 1829, and actually this morning earlier this morning I had gone in again around 1850. So I'm thinking that I'm going with the news, the fundamentals of the world decay at this point, and saying, well, it's just going to get miserable. And that's the perspective I'm taking at this point.
Thank you so much, Steve, for updating us. What is the general consensus, or what is the talk on the street in the US? You have obviously insight because you're from the US.
Well, the US, it's a big concern, I believe. You're looking at something that could perpetuate into a conflict, a bigger conflict than we really want to get into at this point. Financially, it would be a burden. It's just not something that I think we want to do at this point.
Yeah, I mean, nobody wants to go to war.
Right. And I don't, from the readings, I don't think that I can handle, or we can handle a conflict like this, because behind the scenes there is an ally to Russia, which is much bigger than Russia, and that's China. You know, personally, I believe they're in tandem together. What's going to happen next is that China's going to push into Taiwan, and we're going to be involved in that conflict as well. So
yeah, not to mention the Middle East and Asia, and there's so many things going on from the US.
Exactly, and I think that personally, I think that it's something that the government understands, that they're going to be cut, the possibility to be cut too thin on so many different fronts.
Yeah, but what I have speculation, a theory that I understand what was the communication from the US in terms of Russia, but on the other hand, I also have some friends in Ukraine, and they said something different, that actually wasn't Russia who planned to attack Ukraine. It was the US who provoked the Russia by you know, going into the borders in Poland, of the Russian borders, and, you know, placing anti-missile things and rockets and whatever, I don't know, but they have military action close to the border, and the reaction of Russia was a military practice. So they went out, you know, sent out the troops and everything, then they're just observing what is happening, and then suddenly news hit the market that Russia is planning to invade Ukraine. So it's kind of like conflicting messages.
Yes. Thomas, I agree with you there, mate. US is the aggravator. They just don't want Ukraine to join NATO, and he's creating a bit of leverage. That's it, by putting troops there. They'll both come to the table soon to negotiate. That's my personal view.
Even my view is, like yesterday talks, they did not initiate a solution, you know. There's such a long talk, but they could have initiated just a simple, you know, some kind of a promise that they will not add it to NATO. That was more than enough to, you know, settle the issue to some extent, you know. But there was no solution, you know, the direction was not towards solution in yesterday's talk also. Yesterday or whatever.
Just to interrupt for a second, do you see my MetaTrader? So I sent out the position to the Discord group. Suddenly everyone went quiet.
So, Tomas, what is this of? I don't.
What, the screen?
US
Yes.
30.
Yeah, US 30. It's
US 30,
it's right
okay.
here. So when I switch it between the screens, you see this is US 30. So you have these tabs at the bottom.
Ah, okay, I see it now. Yeah.
Yeah, but I only entered, you know, a small position.
Yeah, so I think that, Thomas, that I think, and whoever was speaking, I think that there's a big Mexican standoff, to put it. I'm not sure if you're familiar with that term. But
Yeah,
it's a big
absolutely.
Mexican standoff, and yes, Ukraine did want to join NATO, and of course the United States is going to support something like that, and yeah, Putin would do something, and what he did was overboard on everything. I mean, troops, intelligence, everything. He put a big blockade at the border there. I mean, some can question whether he could have come to the table first, or just shown the power and put up the wall. But they're going to be, I think, for a little bit of time, is this big Mexican standoff. between the two, or not between the two, but because there's Europe and other NATO people are behind supporting the United States at this point.
Yeah, I think there won't be any. There won't be war. I mean, that would be stupid on both sides.
No.
But as to refer to the Mexican standoff, I think they're going to watch each other and see who's going to fart first.
Yes. Who blinks first loses.
Yeah, indeed. Okay. So, gold started to push back up. I just switch back to trading view. Yeah. So what I expect, and I explained in the morning briefing, is that 1865, price didn't pull back too much from 1865. That retracement was almost nothing. So there are certain different scenarios could play out. I don't want to go into speculation and cannot give you one exact setup now. But one possibility is, price is going to create a double top. But also, if you look closely on the Fib levels, you have 38.2 Fibonacci retracement, which is a rejection level, so well-known rejection level. And, price tapped in and soon pulled back. But then we had the weekly resistance at 1866, 1865. So I think we have a zone where price could easily consolidate for a while, and whatever direction is breaking to the upside or to the downside, that is going to give us some direction. But it's still unclear, because the problem with technical analysis that sometimes we can catch the fundamentals. For example, last Friday, when the news came out that Russia is planning to invade Ukraine, I was away from the charts, but I sent out an analysis that, watch the consolidation, or if price consolidates below the resistance level. So this was the resistance level at 1841. And if you see any consolidation below the resistance level, that means that pressure is building up. And I sadly missed this trade, but, the analysis was sent out. I don't know if anyone catched it, but then, price just skyrocketed. So, but I'm not going to cry over spilled milk. We had a good week, so we have to be grateful for every single pips that we caught last week, because that was a tremendous week for sure. And the US
you did really good last week, mate.
Now, we all did good, but thank you.
Yeah. Market
We all
maker.
did good. Ain't no market maker. And we have 105 euros on YouTube. Yet, only 61 likes. So, have you seen the new Discord channel I opened for the public?
No.
Yeah.
No, I haven't seen it.
Let me just share it quickly. So, the private Discord channel for members was, that's what you see on the screen, was huge success. I mean, everyone immediately loved it. Some people were confused and, what is it? It's too new. Even myself was quite reluctant to change to Discord, but it turns out it's fantastic for managing groups. So, based on the extremely good feedback, I decided to open a public Discord group. You know, it's nothing fancy, just a usual chat, some update tabs. It's only for the public to hang out. I'm going to send the link to the YouTube chat. And if whoever wants to join, you can do so. But it's only for public, so.
Great.
Okay. So, we have a brand new Discord. I hope everyone likes it. Going back to the market, gold is pushing up. US 30 is pushing up. So markets are going a little bit crazy.
So, if Hamas, if I can fill some dead air space here, I'd like to apologize to you that I haven't been more active and stuff, but I had a bout of COVID. It took me out for a little bit, and then since I couldn't do anything for that time period, I had to get back into doing work and stuff. So I'm recovering now in Costa Rica and you know, getting back on trying to make all your meetings at 8.
How was I hope you recovered, mate.
Yeah. It wasn't as bad. The biggest thing was that it took time away from the things that I do, and I needed to recover all that time, which that really was exhausting to make up all that time.
Yeah, trying to catch up after an illness or holiday, just insane.
Yeah.
But welcome back.
Oh, thank you. And happy Valentine's Day.
Thank you so much. Yeah, it's Valentine's Day, but no one gave me a bloody flower or chocolate, which is, you know, it's an insult.
I saw that. I passed you a couple beers.
Thank you so much. US 30 isn't going well so far.
Yeah, but I think it's gonna go on and sell, you know.
Hey, well, how you doing?
I'm doing alright, you okay?
Yeah, not too bad.
Yeah, I think it's gonna go down soon, though.
Yeah, but we'll see. I mean, if we have any news, let's have a look on the. I haven't even looked in the economic calendar today.
Yeah.
Silly me. Yeah, we have.
Not much. There's consumer inflation expectations at 4 p.m. UK time.
Yeah, you know, Bullard or this guy, he's notoriously hawkish, and I think he was even mentioned that Financial Times article I sent out earlier this morning.
Yeah, I think he's one of the ones that seems to be more in favour of the earlier rate hike.
Yes. Particularly hawkish members of the FOMC, such as James Bullard, president of St. Louis Fed, are inclined to go bigger and earlier. There is no clear consensus across the Fed set policy along those lines. And
Yeah,
Mr.
but
Bullard,
there's another guy that's actually been also saying that he doesn't think it should happen as well. So, you know, like you said, there's not a consensus all the way around.
yeah, the problem is that it's, you know, it's a double whammy. So we have an economy, the US. Inflation is high, labor market is tight, you know, shit is about to hit the fans. We have commodity supply shortages, so, and, you know, supply chain issues. So the economy is, on one hand, overheating. On the other hand, it's struggling to grow. And the Fed expecting a recession. Well, a slowdown first, and then probably a recession short term. And the issue is that in order to control the money supply, they started to reduce quantitative easing, i.e. the tapering. So they're pulling money out of the market. They already started this, but the knock-on effect and the results are going to be visible 6, 12, 18 months down the line. Financial markets started to already react, but the economic indicators that we observe are going to see, you know, the results later. So if the Fed is about to start aggressively hiking rates, they can cause some serious damage. I mean, the economy is not in the best shape, despite the labor market is tight and, you know, numbers are growing, so the economy is in expansionary phase. But we have issues with the supply chain. People don't want to go back to work. We have high inflation, so it's a tricky situation. And all my respect to Jay Powell, if you're listening to this, keep up the good work, but, you know, you have to do something, mate, because it's not going well.
But do you think they're gonna raise? Hi, Thomas.
Hey, Pascal.
Do you think they're gonna raise really high interest? Because you also have to consider their debt that the USA has currently, and it's more than 30 billion.
Do you think they care about the debt?
Yeah, they do, because if they can't pay it back, then they are in deep shit.
The US will never default, I guarantee that. It's too big to fail, and they know this. And this is the US money supply. So this is the M0. Well, we could look into the M2 or M3. There is a slight difference between these naming. So the M2 includes any saving deposits, physical money, electronic money. But anyway, for the purpose of the example, this will be more than sufficient. You can see that since 1968, they started measuring how much money is entering the economy in the US. And you can see that most of the money ever been 40% of all the money which has ever been printed in the US was printed in the last 12 months. So the amount of money in the economy is just tremendous. And to answer your question that whether the US has a possibility to default on debt, no, absolutely not. They're never going to default on debt.
Because
other countries, yeah.
I think an interest rate, I don't think it will harm a lot if they only do like not more than 1%, but an interest rate, but a higher one, that would mean that many companies would go broke. Many companies who have loans and everything, so that will get more expensive. There is a group, I don't know how it's called, where 3,000 best companies of the United States are in, and more than half aren't doing well. Their stocks are dropping. So it's something they have to consider, because if we look here in Europe, Lagarde didn't want to raise yet the interest, because otherwise Italy and Greece would be bankrupt. And that wouldn't be good either. So I think the approach of waiting that the economy gets better. Okay, meanwhile, we are going to be a little longer in the inflation. And then once you see the economy is good, then Pelosi makes the announcement we're COVID-free. Then they could take the inflation. But we'll see. At the moment, it's a very difficult position where they are in. It's
Yeah,
like
but the
in every
problem
way
is,
they will go, it's gonna have consequences.
yeah, it's when you go into war, that comes with casualties. Problem is that I really like I see that how much you read about the topic, and you went to do the research, learned about it. But the problem is you mix two important things: the public and the private sector. So the U.S. debt in form of treasury bills or treasury bonds, and the public sector in form of the stock market. It's two different things, and you know they are always in competition. They are competing with each other in sometimes, not always, but sometimes. So the stock market had 10 good years because the government or the Fed, the Treasury, they were pumping money into the economy. You know, all the companies been boosted. They were buying back bonds. So you know, that was one channel where money entered into the financial system. So the circular flow of money, circular flow of income. The circular flow of income, where the money was, you know, why do I see myself twice?
Have you drunk?
No, but can you see I'm twice on the screen? So someone is either using my... Hold on. Oh no, it's okay, fixed now. So the public and the private sector are competing with each other. The stock market had 10 good years after the financial crisis. You know, financials have been boosted. They took shitloads of loan. And yes, if they increase the interest rate, the stocks are going to go down because the what is called the cost of borrowing is going to increase. So the liabilities, the monthly liabilities, the short-term liabilities are going to increase because each month they have to pay higher and higher interest. So it's not good for the companies. Inflation is going up. So on the other hand, they have material cost increase. So anything that goes into the production, whether it's raw materials or services, raw materials are expensive. Services, they have to pay higher labor cost, as well as you know, in production, in factories as well. So that's not going to be good for the companies. But on the other hand, the US government bonds are going to offer higher yields, because if they increase the interest rate, it means they have to offer higher yields. That means the demand for US bonds are going to increase, because if you look at the stock market, which is a risky asset considered to the US government bonds, US never went into bankruptcy. Mexico did, Russia did, Venezuela did, a whole bunch of other countries did, but not the US. So if they're offering higher yields, from an investor perspective, think about this. Which one would you choose? A guaranteed safe haven, risk-free assets of, you know, 3-4% from the US government, or going to the stock market, which is struggling, recruiting people, paying salaries, inflation is going up, so they have to increase the wages. So you see the difference. Of course, investors are going to choose the you know, the good old government bonds. So on one hand, the government is going to have you know, more income, but they're not going to go into default.
Thomas, just to add to your point, and please correct me if I'm wrong, but last year I'm pretty sure was the most ever mergers and acquisitions in history. So all of these big companies, you know, would have done all of these acquisitions, of course with a bit of equity, but mainly with debt as well. So they would probably be even more sensitive to interest rate increases as well with all these acquisitions they did last year. What do you think of that?
I don't know, because I don't really follow mergers and acquisitions. So the corporate sector, let me just see. On Coifin, there are some... Oh, let me just... Oh, you see my screen, yeah, okay. So...
Like last year for investment bankers was the best year ever. You know, it was the most ever mergers and acquisitions. So I'm just assuming that, yeah, that was all mainly done with debt. of course, equity sometimes.
I don't know. I cannot
it
complete.
reinforces.
Yeah, I
I'll
cannot
find some stats.
comment. Yeah, definitely, because I cannot comment. I never worked in investment banking. I worked in trading pretty much in the past 10 years. So it's difficult for me to comment on the investment banking side.
Yeah. Oh, I'm just kind of, saying that what you're saying is exactly right. It's probably even more sensitive to the interest rates.
If you say that I'm right, then I absolutely agree with you. Yeah, it's going to be definitely an interesting year ahead of us.
Thomas, what do you think about the flattening of the yield curve? So is that adding to your bearish position in the stock market? It seems like the smart money is predicting a recession ahead. Is that part of your analysis for the shorting the stock market?
So, okay, I didn't want to go into talking about the yield curves, because that's quite a heavy topic for for YouTube.
Yeah,
but
no
let me
worries.
just have a look. We're going to have a look. I need to refresh anyway my education about yield curves. I'm just going to change the music quickly on
Gold
YouTube.
popped up to 1860, by the way, that 1860 area. So that could be of interest.
Oh, let me just quickly go back. Yeah, but we were expecting, so I sent out the analysis this morning, and I'm expecting, come back to 1863. But anyway, let's jump back to the yields and the yield curve flattening. And I think I don't know what was the ticker. 2 year, 10 year. I will find the yield curve, but the yield curve has flattened. So this yield curve is one of the main indicator of a recession. So if the yield curve is flattening and start to turning upside down, meaning that you said it right, that investors are speculating on a recession, because the front end of the yield curve, so the short-term government bonds, are representing inflation expectations, and the longer, or the other way around. So the 2 years yields are going up and the 10 years is going down. So definitely market is pricing in an interest rate increase, but I think we had a yield curve flattening and then inversion in 2016, in 2018, in 2020. So every 1 or 2 years we have this, but it's definitely an indicator of recession. And I will try to find off the screen the treasury yield curve. Yes. So
I just chucked a graph in the Discord.
let me just, so right. So usually when I was a bond trader, we mainly considered the 10-year and the 2-year yield curve. I never put this graph on, but it looks really nicely inversely correlated with gold. And I would be interested to see what caused this drop in Nick, you might be able to help out. So, you know, the US 10-year, 2-year, which one had the biggest move last week? The 2-year or the 10-year? I guess it was the 2-year, wasn't it, that caused this massive increase or decrease?
Yeah, on the yield, collapsed on Friday night, right? So on Friday night, everyone ran to safety. We're buying the bonds, right? So I know that you know, suddenly the yields went down and the bond prices went up, and that was part of the safety bet. I just been trying to understand or follow. The guys have a YouTube channel called the Eurodollar channel. It's kind of like highbrow macro, but I try and pretend I understand. But it seems like something to follow. You know what I mean? You know.
Yeah, absolutely. I mean, it's bond market is more accurate than anything else in the world. So the bond market was the best to forecast wars, crisis, credit crunch, because you know that is where the smart money is trading. So the fixed income market or bond market is not accessible for retail investors, and all the people who trade on bond markets are highly educated. So when you see that the spreads are increasing or widening, meaning that there's more volatility priced into the market, that is one indicator, for example, that something is happening on the market. And that's when, you know, smart money starts to hedge the portfolios. But yeah, I will look into this yield curve inversion.
Yeah, it's pretty cool. Yeah, the big money's in the bond market, isn't it? And that's the most the darkest market where all the kind of very dodgy money's made. If you, I'm sure you read the book The Big Short, and there's some interesting characters who are, you know, in the bond market, and no one seems to trust them. They seem to have a bad rap. It's kind of interesting.
Yeah. To be honest, since I left the trading floor, I wasn't even following bond markets and yields.
Okay, yeah. Anyway, thanks for your input. Like, I'm just pretending I know. Just interested, that's all. Thanks very much.
No, it's fine. But the yield curve inversion, so when it's going upside down, so, you know, the front is going up and the back is going down, or the other way around. When it's constant, that is a problem. But usually the Fed is there to balance it, because the reason why they're issuing bonds and the quantity they issue, because it's you know, it's an auction-based quantity, so it's limited how much they put in the market, are designed to control the yield curve exactly for this reason. So US 30 decided to reverse. Going to reduce the risk now. Well, I just saw Bachi's message on Discord about the US 30 sell. Because, you know, these guys are doing a challenge, and let enter at Thomas US 30 sell. Where's Rayon? Let's see who we have in the chat. In Dilaor, Rays, Simon, Tamara. Why is everyone so quiet? You keep... Let me do the work and talk.
We don't want to sound stupid.
That's absolutely right.
Okay.
Well, I figure if I don't sound stupid every so often, I don't get to learn things and stuff. So I'm going to ask a question there, Thomas, if that's okay.
That's fine. I mean, there is no such thing as stupid question, and the only way to learn if you ask questions.
Correct.
That's the only way, or by making mistakes. But you know, asking questions is going to cost you less money.
Yeah. So my thinking, as I said before, is that I'm still in long, and I'm gonna stay in until I hit that or look at the market at or look to take out at 1875. Reason being is that if I go to do a if I go to my daily and I look from the perspective of the Elliott wave, this run is the fifth run, and it needs to go beyond the third run, which peaked at 1875.
Yeah.
So,
Quick question. Sorry to interrupt. Do you know the Elliott wave counter, Marat?
Say again. Counter what?
Elliott wave count. The guy is an Instagram. He's really good in counting Elliott waves.
Oh no.
Oh, okay. I thought you're going to say you follow it, because he was bloody short on gold since December, and you know, since I can tell you the exact. So he was short from 1818 or something, but that he got burned so many times with Elliott waves.
Yes. I mean, I'm not funny. I don't follow it, but I for some reason I always go into the count and I do the count and I consider that. And overall on the daily, it kind of works on the daily, but not to make a full decision or base your trade on just the Elliott wave. No, I don't do that.
Yeah, no. But looking at the chart, so what I explained in my Sunday video is that, you know, this bearish trend line, if you go down to lower time frame, you see that the bearish trend line was broken with fairly impulse move, I can say, on the Friday. And, you know, this was the retest of the trend line, and the Fib 38.2 broke the weekly or the monthly resistance. So, you know, gold is going to go much higher now. So if you're in a buy position, then I'm pretty sure that it's going to hit even 1880 this week or higher.
Well, that's good confidence.
That's purely based on the fundamental side, that we had the shitstorm around the US and Russia. We have the inflation worries. I mean, if they're not going to raise interest rate right now on the emergency meeting, which probably they're not going to do, we have a month until the mid-March interest rate decision where they're going to increase interest rate. But until that, we have another inflation data and an NFP. So those could be, you know, fairly bullish for gold.
Well, that's a good point. When the Fed does raise rates, what kind of chaos can we expect?
There is a good website. Let me just find it. So it's again another great Financial Times article. When the rates rise, what can be expected? What's happening? How will this affect me? In-depth analysis. They talk about, for the first time in a decade, the US Fed is considering to raise record low interest rate. I think this article was a bit older, but maybe they updated to the current issue. So it guides you through everything. How does it affect businesses, the economy, the UK, rest of the world? It's a fantastic article, so, you know, pure knowledge. Read it through. I'm going to send it into the Discord. What's your Discord name?
I believe it's simply Steve.
Ah, yes, Simple STP. Yeah, I just tagged you on Discord, sent it. Yeah, it's a wonderful thing. Wow. Am I even going to read it tonight? Pascal, if you're still here, I definitely recommend you to read this because it talks you through about what we discussed. Even goes about the currency traders positioning themselves. It's a fantastic piece of article. Let me send it to YouTube as well, so the guys on YouTube can educate themselves as well. And US 30 is pushing back up. Not good.
Hey Thomas, isn't historically the only cure for inflation is just raising interest rates again and again, which inevitably leads to recession? Isn't it the only way to deal with it? Because it's such a problem when it gets out of control.
The problem is that when the Fed is coming to a decision to raise interest rates are already high. Inflation is already high. But this is where we have a problem in the education system, and not talking about primary school and high school, but at the university level and even PhD level. Maybe not PhD, because PhD is about coming up with a new idea and going against the previous ideas. But the problem is that all of the economists in the world have been trained on theories which have been developed and all the dead economists came up with in the 1930s, 1940s. And those hypotheses and theories haven't been updated since decades. And the problem is that when those methods and economic theories have been developed, we didn't have things like quantitative easing, tapering, we didn't have financial crisis such as in 2008, which affected the housing market. So anything that they teach at university is completely useless. There are some good articles, but specifically how could a government or a central bank tackle inflation other than the old doctrines and orthodox methods? I have no idea right now. Because it doesn't matter what I think that how the Fed should do its job. The markets have been trained in a different way. That's an interesting question.
I think that...
Yeah. Okay, you go, mate. Sorry.
I was just going to say that they need to increase spending on, investing in drilling for oil, so all these commodities don't go up, which is like the biggest cost. Investment in oil has dropped off massively, and that's driven by, I don't know, like the way the world's going. So yeah. They need to drive down the cost of these things, which they can do.
The main issue is that what you just brought up about how to reduce inflation, other than going with the old tools and methods that the central bank's been using for almost 100 years, which, you know, increasing interest rates. I've read during university, I read a few journal articles and books, but the problem is that they were merely hypothetical and, you know, what if. They did some calculations, obviously they had to back it up with statistics, but it was purely theoretical. But the good thing is, Google is a fantastic tool of the 20th century. If I show you this, if you just Google up, you know, alternative things to reduce inflation, it comes up with a few ideas, but it's highly economical. This is what I talked about. So everything, this is exactly what we studied at university. But this is hypothetical. Theory and evidence. What evidence they have? So reduction inflation always comes at the cost of temporary lower output. Yes, because there's an output gap. Ah, okay. So they're talking about the aggregate demand and aggregate supply. So this is the supply curve, rate of inflation and the output. So if the inflation, if they're reducing, then the output is going to be reduced as well, i.e. the GDP is going to suffer. And the issue is that there's no two country the same. Like some of them are, oh, you don't even see my thing. Yeah, so they talk about how to reduce inflation in a new way, but the problem is the countries are different. So one country maybe is heavily manufacturing based, such as China, whereas Austria is heavily service based. So the theory would not work in practice the same way in these two countries.
Right.
Therefore, this. Sorry.
I was going to say that's why the Eurozone doesn't work, because all these countries have different needs. Like the Italians probably need to weaken their currency and go back to more production, but they can't because the Germans don't want to do that, and it's such a mess, isn't it? That's why it's really hard to work in Europe.
I really, really like it that you joined the team, because I read a university article. At university, I read an article about why the Eurozone have been designed to fail. And I'm going to send it to you, but it talked about different things about the Eurozone idea was pretty similar to the US, that they're bringing together all the states. But in the Eurozone, the problem is, you know, they speak different languages, the different culture. And the other thing which you tapped on is that the monetary advancement is different in each country. There's an East and there's a West. Historically, we had communism, socialism in the East. Therefore, you know, we're way far behind from the West in financial markets, in household income, government spending, so way behind. So how can they apply one unified monetary policy to the whole Eurozone? It's just silly, crazy.
Yeah. And it's a second attempt. My friend who actually worked for Goldman Sachs, an old boy from my school, he worked in the London branch. He's a funny guy, but his study, his research is going on about it back in the day was back in 1890, the Europeans had a silver standard, and already back in those days, actually it was the Vatican who started messing with the silver content, and it was the first effort of Europe of using a centralized, central currency, and it even failed because they're all basically printing in their own way, and basically it's repeating again. So he was laughing about 20 years ago, yeah, it's going to fail, but it's kind of funny. Well, not funny,
Yeah.
but yeah.
I didn't know about the silver standard.
Yeah, it's a funny one. It was I think the Italians started doing it, the Vatican was involved, the Germans were involved, and the Germans figured out a way to make silver more cheaply. And then the Vatican, sorry if you're Catholic, but they figured out how to put more crap in the silver, and then it all went haywire. It's kind of interesting.
Yeah, this whole gold standard is fascinating, and one of the reasons why the U.S. had to decouple from gold is this after the Second World War. You know, the restorations and you know, all the countries needed money, and during that time was the GBP was the reserve currency, so that was the strongest currency in the whole world. Great Britain, God bless the Queen. So that was the strongest currency, but you know, Second World War, things didn't really turn out too well for the European countries. The US was in a position to lend money. I think the UK got like 3 billion or something. And in the US, and you know, in Bretton Woods, I think it's the Washington Mountain, or anyway, somewhere in the States, in Bretton Woods, these countries have sat down and have said, listen, we need to figure out something because we need to spend money without damaging the economy, you know, risking hyperinflation, etc. But we cannot print enough money because money is linked to gold, right? So how can you, if you cannot mine gold, how can you increase the money that you print if it's linked to gold? Because in the dollar, it was said, you know, 60, 70 years ago that if you take this dollar into the bank, you get equal amount of gold. It was no difference than in Europe. So the money was linked to gold, and they came up with like, okay, John Maynard Keynes said like, you know, just fucking leave it. So they decoupled from gold, and they had the ability to print as much money as they can, and it was one of the biggest mistake in the whole world. Obviously, the advancement and development was huge, but look at the mess we are currently right now. Consumption is disgusting. People buying unnecessary stuff. You know, the planned obsolescence. So the lifetime of some of the things, this microphone, this laptop, this screen, can be measured in months and years, because you know, probably 2 years this screen is gonna go to the bin because it's too old now. They come up with a new design, a new color that they're forcing you to change, and the planned obsolescence. So they're planning things and building in things into these electronic devices, so they go bad, they go wrong, they have to change it. Now, the smart thing that the US did, they come up with the petrodollar system. So they linked the major commodities to the US dollar, creating an artificial demand for the US currency, which is one of the most brilliant thing in the whole world. And I started talking too much about economics as well, but basically they decoupled from gold, and they were able to print as much money as they want. And I show you the chart about the money supply that's currently circulating in the US economy, which is insane, and I think the bubble is going to burst soon.
Yeah, it's interesting. Who's the Dr. Lacey Hunt? He's an old fella, used to work in the Fed. Here's another interesting chart. So just looking at also the money printing in Japan and Europe, and then China. And the irony is that America is the least dirty shirt. It's very worrying. So you're Dr. Lacey Hunt, and he also explores debt to GDP, and America is still the least dirty shirt. So yeah, China is way off the charts. So yeah, that's kind of an eye opener. Yeah, I recommend anyone look at. He gets interviewed by a few ex-Fed members. A very interesting fella. He's about 70 years old, but very interesting charts. Anyway, that's my 2 cents. I'll let it go. Thanks very much for your time.
Yeah, no, it's fine. So interesting you mentioned debt to GDP. So when I went to university and worked in real finance, you know, everyone was monitoring these indicators. How much is the household debt going up, debt to GDP per country, per capita, etc. And you know, who knew that the governments and central banks are able to print so much money that it's not going to hurt the economy. And if you look at the stats, households are heavily indebted, governments are swimming in debt, US, Italy, some of the major ones, Japan, and everyone. I have a book about the coming bond market collapse, and every single year people were shouting this is the end of the world, but nothing happened since 2008, and even before that was pure. What caused the crisis was pure greed. And the problem is that I don't know how long is this gonna go, but yeah, it's not good. But the problem is that what the indicators say and the economists say and academics say, reality is completely different, because they push the bike until they can. Right, looking at the market, Luis Gonzalez asking YouTube, you think gold will go down next hours? I would not risk anything on gold. So we talked about, this bearish trend line, and if I just zoom out, you can see that bearish trend line was broken with an impulse move to the upside. Yes, the RSI is showing a heavily oversold territory, but the problem is the fundamentals are pointing into exactly the opposite direction. The gold is gonna go higher, and because we have no control over inflation, we have no control over geopolitical tensions, we have no control about Fed announcement. It's a tough time to trade gold now. But right now everything is pointing into, price is gonna go way higher than the current price level. But how high? I don't want to guess it.
Oh, Thomas, there's an interesting article. It goes through history, and it says the percentage increase in gold every time there's either war or potential conflict, and it gives the percentage increase, even just potential conflict.
The percentage increase of what?
He said gold, I believe.
Yeah, I understand gold, but gold in gold, what is it? Gold above surface, investment.
The spot price in gold, the percentage increase.
Oh, okay. I thought it's the quantity.
Not necessarily a war, even just a potential conflict. It has it shows every time the percentage increase, and it's always double figures percentage. I'll find the article, I'll send it through. It's pretty interesting.
But that's, it's common sense, because, if there's, gold is not just inflation hedging, gold is a hedging asset, a store of value. So if you read into what is the purpose of gold, what is the meaning of gold, what is money, that's the economics 101 they teach at university. So during market turmoil, whether it's financial crisis, war, or anything, investors run into safe haven assets such as gold and US government bonds. But I tried to find you something, because something popped in my mind.
Yeah, send it. It'd be interesting to get an average of how much it went up every time a potential conflict happened.
But is it meaningful?
It would be different every time.
Yeah. Absolutely. I mean, that percentage increase, I think it's meaningless, but something came up to my mind. I was wondering whether we can put a chart together, the WIX index, which is the fear index, the volatility index, and gold on the same chart. Yes, we have VIX. So this is what I found. I want to show you Oh, come on. So if I change gold to a line chart and then link it up with the WIX index or the volatility index, why does it look different now? Fucking hell.
Hey Thomas, would it be a good idea to trade the VIX if we're trading volatility? Because that's the gold trade, isn't it? We could just get straight into the crazy VIX. That thing's got crazy swings.
Yeah, I mean I never traded WIX index, but I did observe. Yeah, I don't see. Let me show you. Yeah, so this is what I was thinking to have a look on the WIX and the gold spot price, but you know, it shows exactly it's difficult to put this together because you know, one of them is way above or almost close to 1900, the other one is measured in 0 to 50 or 0 to 100, but is a positive correlation. So when volatility goes up or the fear goes up, then investors are running to gold. So that confirms the theory which one of you just mentioned. Michael, I think, yeah, Michael was it?
Yeah.
So many people asking what is going to happen with gold. I really see two scenarios. It can go up or down, and without being funny, we have this strong support of the monthly pivot point, 38.20 Fibonacci, and this descending bearish trend line if I zoom out. So it could give an extremely strong foundation support to go higher to 1880s, even 1900s. But on the other hand, indicators showing, you know, gold is heavily oversold. It should retrace after the impulse move. But do I really want to trade gold after, you know, all the geopolitical news that came out on Friday and inflation? Probably not a good idea.
Hell no.
Damn right. Hey Tess, how you doing?
I'm alright, bro. Just tired, man. I've been at work since 4:30. I've just finished.
Bless you. What do you work?
Me, I'm a driver.
A driver. Respect, man.
Yeah, man.
Make sure you drink enough water and exercise, because sitting all day in a truck or bus or airplane, whatever you drive, it's not good.
Yeah, I know. I just started it about a week ago, man. It's been a long time. I was out of work. I had an accident, man. My head was split open and that. I'm lucky to be alive.
Oh man, sorry to hear that. Have a speedy recovery.
Yeah, no, I recovered. It happened on Friday the 13th, 2019.
Oh man.
Yeah, I don't come out on those dates anymore.
So you only recently joined 2 weeks ago?
Yep.
What is your experience so far?
I'm loving it. You know, I wanted to join from a long time ago.
I know very well. We have been speaking on Telegram for a year.
Yeah, I know. And I haven't been working for a year because of the accident. And now I'm back in work. I was able to join up straight away.
But why didn't you tell me, mate, your story? I mean, come on.
It's alright, man. Don't worry. It's all good.
You know, you should have told me your story.
But we've never had the time to, you know, have a chat properly yet. You know, you're always busy or I'm busy.
That's true. But anyway, welcome to the team. I'm glad you made it. Finally on the good side.
That's it. Let me just get off this bus.
So, Atomic Bot on YouTube. Expect Tuesday, Wednesday to create weekly high on gold. There will be manipulation before they will go long because everyone is bullish right now. You know, mate, anything is possible. Last week everyone was bearish, but, you know, we went long. This week everyone is, you know, bullish. Maybe we should go short. Who knows? But if you ask my opinion, I think gold is going to pull back. Probably we're not going to have a war between US and Russia. If gold pulls back below this trend line, you know, below this this high, but even that I'm not too sure. 1830 is extremely strong. We have another resistance at 1870. But the good thing is that we finally started to go up and broke many bearish confirmations. First one was 1830, second one was 1849, 1850, the monthly pivot point. Now if we go above 1870, there's no stopping until 2000. Probably we're going to have, you know, retracement and pullbacks because the market doesn't move like this, so we're going to have pullbacks and retracements. But you know, I said 2 weeks ago in my YouTube video that we are going to see 2000 this year, and I'm still bullish on gold. But right now it's wise to just observe the markets.
Hey Thomas, just a question. You said, you know, like potentially countries are buying lots of gold. Why are they doing that?
One of the explanations for this is countries have been categorized by the rating agencies, Moody's, Standard & Poor's, and fuck knows what's the other one, but they all rubbish basically. They led the 2008 financial crisis because of their impotence and incapability and conflict of interest, but that's another story. So when they rate the countries along with companies, etc., if they downgrade a country from, you know, good investment to junk, so they have the ratings AAA, BB, CCC, all this. They downgrade the country because they have expecting, you know, currency fluctuation, failing to repay debt, etc. This is one good way. They rack up so much gold because, you know, gold is centuries ago. It's a good investment. Store of value. That's one explanation, because they need to protect the currency, and the currency, how would you define a currency? What the price of currency? Currency price is defined or given by the trust we put into the currency. And who do you trust? Do you trust a nice big gold bar, or do you trust some impotent prime minister or president? Of course you're going to trust money, gold. I think we're getting some attention on YouTube because we have 130 views consistently today. We started with 60 and an 80, but it hasn't dropped below 120 since we started. So everyone, thank you so much. If you're listening to the YouTube conversation, if you're enjoying it, if you get any value out of the daily conversations in the afternoon, I'm really glad, and I, you know, welcome you here. And thank you so much for hitting the like and subscribing to the channel, and, you know, just listening into the conversation.
Thank you, Thomas. I gotta go do some things. So I'll see you next time.
Have a good
Great day.
recovery.
Yeah,
See you
mate.
later, mate.
Thanks.
US 30 doesn't want to drop. Increase my stop loss a little bit. See if it's going to take out the previous low, and if it does, I'm going to start trailing the stop loss and pulling down the dust take profit. And that would be nice if it drops to there. That would be 5k.
Hi, Damus.
Hey Francis, how are you?
Good. It's been a long time. We have not talked. By the way, US 30 will not move because the next candle 30 minutes will be the hectic one, so we might need to watch.
Or I think they're waiting for the White House to come out with some statements or news, and Russia
Not
as
really.
well.
US 30 usually it's about New York time 9:30. So they always will wipe up the top then go down. So that is usually where I look at the trades.
But you saying that US 30 is not affected by the current geopolitical tension?
Not really, but usually 9:30 New York time is the most volatile timing.
Yeah, that's the market open.
So we can just wait and look.
Wow, we have now. I'm going to show you. Currently we have, or I have, let me show you. I'm really proud of this. $5,506 followers and or subscribers on YouTube. That is fucking epic. 3 weeks ago it was only 5,000, which means in 3 weeks we gained 506 subscribers. That is an achievement. Thank you so much.
Awesome, nice one.
That's your Valentine's box of chocolates, yeah?
Yeah, no chocolate. Because you know what they say. A moment on the lips, lifetime on the hips. June Y on YouTube. Happy Valentine's Day, Thomas. Tomasz, where's your girlfriend? Haha. Ha. Sorry, I'm not in the market anymore. And she's my wife now. My girlfriend is not home anyway. Romesh Mate, hi, I'm new to your channel. Your way of explanation is simply great and all your speculation are really awesome. Well, thank you so much. I just draw lines and talk about economics. I mean, the market happens to go in my way in last week, but you know, that's 1 week we win, the next week we lose. That's losses are built into this game, so unfortunately. Sohail Chai-Fi, should I buy gold now? I mean, if you for Valentine's Day, if you find a necklace or jewelry, definitely buy it for your wife. Highly recommend it. You're gonna make her happy. Nice gold ring. Do it. Go on.
Or he could just buy physical and just sit on it for 10 years. That's another option. And don't worry about the wiggles.
Indeed. You know Dave from... He's not really active in Discord. He's expecting her first son. I haven't spoken for about a week. Probably she's worried. Her wife is, you know, she can go into labor any minute. Maybe they already did, but he has quite a substantial investment in physical gold.
Nice one. A lot of people getting into buying up physical silver. That's kind of interesting. They think they can dry out what is the COMEX exchanges or whatever. I don't know.
Commodity exchange.
Yeah, because they think. I think you showed the chart, or maybe someone else, the reserves or where the exchanges where they have all the silver and gold stored. It seems to be like they're running low, and they think they're winning. So I don't know if you're following that.
The chart from the YouTube video.
Yeah, it was you. A few other people will be looking at that. There's two exchanges, right? There's the London Mercantile Exchange, and then there's the COMEX in America, where they keep the physical. And it seems like it's running low in silver and gold, apparently. Like they believe they are doing the short squeeze, and they're running out of actual physical. Apparently.
If you're talking about this chart, which I showed in one of my YouTube videos, this is the London World. Is it this one?
Yes. Yeah.
That's the London World Holdings, but that is, you know, the physical holdings of buyers, so they can store the physical gold. They don't have to deliver it into the countries, because only governments and, you know, countries have the logistics, the capability, and to actually take delivery and deliver it to their house or to their central bank. So these are, you know, if someone buys physical gold, this is the vault that they have the option to, okay, I want to buy gold, big gold, but you don't have to deliver it to their house, or you know, we're talking about governments and, you know, companies, so they can safe keep it in the London Bullion Market Association. So it's not a reserve, it's just a vault.
Oh, just a vault, yeah. I guess if that is just running low, just means governments are just taking it rather than leaving it there. And some other investors, there's a trick where they're because the actual price of silver, if you buy it from a bullion dealer, and the futures are so different that they buy a futures contract and demand delivery, and they make the difference between it. That's meant to be another trend as well. So if you've got enough money, like a few $100 grand, you know, you can buy a whole position and demand delivery. Apparently they hate doing it, but they're legally bound to do it, and then they cut it up and they, you know, sell it to the bullion dealer and make the difference. It's kind of interesting.
Yeah.
Anyway, I was just wondering if you're
yeah, but just looking at, yes, the quantity definitely decreased, but, you know, this fluctuation of few million ounces is meaningless. We had this before 3004, 3003, then up to 3005.
Right, yeah, sure, yeah.
It's all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Right, US 30 looks like is going to follow the analysis. So far it's running in 1,000 points profit. Who entered into US 30 sell?
Me too.
Howdy, good afternoon. You know, it's not a big movement, 1,000 points on the US 30, but it's, you know, one standard lot and it's already £800 in profit. I think it's a good day rate.
Yes.
We just had another 5 subscribers to the channel. It's fantastic. I think this year or this quarter we're going to hit 10,000 by the end of, no, maybe second quarter. End of March would be too unrealistic. So let's have a look on gold. Yes, gold hit 67, Vasim, but you know, my analysis was a possibility of a double top, which it looks like it's playing out, but I don't want to get caught up in another. So this looks like a double top. You know, price could come down to retest 1850, which is the top of the bearish trend line. Lines up with 38.2 on the Fibonacci, like this one here. Oh, let me just change to trading view, sorry. So it hit 1867. You know, it could pull back, but I don't want to get caught out. So if it pulls back enough above 1830, then I might consider buy. Aussie trader, actually not everyone is bullish on gold. The retail crowd is now mostly bearish across the board, 58%, which is usually means stop hunt, then decline in my experience to get more liquidity. RSI is order block. Completely agree. You know, you said it perfectly well. Usually when the crowd is bearish, then going to be a stop loss hunt. Last week was a perfect example. 1841, everyone was shorting gold, like literally 90% of the traders. Luckily we didn't do anything. It's Friday evening, and then, you know, everyone was closed out. And do you remember the chart I drew up last week? That it was something like this, and it had a text that cluster stop losses. So this was the chart I sent out in the analysis on Discord, but I think I can, yes, I can send it. I can show it to you on Discord. So gold
You know, the whole lot of buy entries just above 1830 or so.
Yeah. So this is the private Discord for buyers. This was the analysis sent out on Friday, that if you see any consolidation, you see the two red lines. If you see any consolidations below this cluster of stop losses, that means price is gonna go bullish and it's going to tap into that area of sells. So let's have a look what happened on that day. Cluster of stop losses. It's difficult to replicate because I deleted that chart now, but it was a little bit lower, something like this. But I just delete and clean up. So this was the area I talked about. You see the consolidation. If you go down to the 5-minute, price was really moving sideways just under that cluster of stop losses. And what happened? Broke to the upside, moved sideways. And is it gonna go higher? I don't know. But if you look at the analysis, yeah, 1861, 1855, it could go higher. But today I'm not too confident in gold, so I would not give you an exact direction that yes, this is going to happen. It would be foolish.
I think you're right, actually. I think the price action is very sketchy at the moment. Yes, it did reject 1870 a bit more forcefully than it has done up to now, but it's you know, it's just a short rejection and then it starts climbing again, so it doesn't necessarily mean a great deal.
Yeah, it's only Monday. We just had some minor news that Russia is maybe attacking Ukraine. Inflation came out that, you know, never had inflation high as 4 decades. Anyway, all came out on Friday. Asian traders had no chance to react to these news, which, you know, they pushed up a little bit higher. So I'm just going to purely observe the market today.
And it came down a bit, but it respected 1851.
New York Stock Exchange is open now. Let's have a look on NAS. S&P 500. Do you guys feel the market today? Did anyone have any good long position or short, decent 100 pips?
I was hoping for it. I put a buy in from 51 when I went to work. Then when I finished, I saw I got stopped out and it shot back up.
Yeah. Oh, your camera is on. Where are you?
I have just arrived home. I'm just standing outside enjoying the nice weather.
Where is it?
Glasgow.
Oh wow, it is really sunny.
Yep.
Wow, let me put up. So beautiful Glasgow, streamed live on YouTube. Give a like, people, if you like the view. Hit the like. Any pretty girls around?
Plenty out today.
Oh, nice. I want Rayon to thank you, mate. I want Rayon to come on because he lives in Jamaica. So maybe we could ask him to tune in to the Zoom and you know, show us around in Jamaica, down the
Wash up
beach.
to the ocean. Yeah.
What's happening with US 30? It is dropping like a dead fly.
Well, I'm off, so I'll say goodbye to you anyway. Have a good day.
Have a good day, Alan. Thank you so much for joining in. I hope everything is okay. See you later.
Yep.
Who's in US 30?
Thomas, could you show us the US 30 chart?
Oh shit, sorry. Sorry. I have to watch the live stream and the Zoom, and sometimes I forget to switch on. Sorry. So it's running in 2,000 points profit.
Wow, that's amazing.
Yeah, I'm in a sell as well.
How many lots?
Oh, just one.
Hey, that's good money.
Yeah, it is, yeah.
You got the Valentine days covered. I hope you're going to buy something nice for your girlfriend, wife, or you know, whoever makes you happy. Yay, good day today again. Probably going to reduce the risk now a little bit. Putting down the stop loss. Good thing about the 1 minute chart, if I go down to the 1 minute chart, it looks like, you know, I'm running in thousands. Well, actually we do run in thousands of points profit, but it looks so much better when you have, you know, these big drops and candles.
Famous, your US 30 broker, it's XAUUSD or what?
Pride what?
No, your US 30 broker is no, you're currently the MT4. The broker it's XAUUSD.
Forex, yeah.
The one lot, if I'm using my own broker, that would be 100 lot for US 30 based on the numbers that I see.
Wow.
The
but
leverage,
you are using micro lots.
Yeah, but your one lot is like my broker for 100 lot for this kind of pip towards for this kind of pips to profit. So that's why when I look at your profit versus your lot size, I was like, wow, this is your 0.1. It's my one lot in the broker.
I have one lot. I can't sell. I have to sell one standard lot.
So that is the smallest that you can get.
Yeah, it's a standard lot size.
Well, yeah, if you don't have big account, it's very hard to trade US 30 in that broker.
Most brokers don't offer, you know, micro lots, and they only allow one standard lot size trading on US 30 or, you know, indices. But yeah, you have to have capital to survive, you know, the big price swings.
Thank you.
Hey, Thomas, I have to head home.
Everyone's
Thank
leaving.
you so much.
Thank you. Did you make some profit
I'm still
today?
at work. Not really.
No? Why? You didn't trade
Not
US30
into
with me?
Yeah, just a bit small, very small lot. But yeah, I did well on that. Thanks to you.
Small profit is profit, so any profit is profit.
Okay, Thomas.
Anyway, have a good day,
have
mate.
Have a good day. Thank you. Bye.
I'm also heading, Thomas.
What on earth is happening? Deserters. We're going to have a conversation. Yeah. Okay, guys.
The markets are boring today. Not much to do.
I know. Okay, guys. I wish you a relaxing evening.
See you next day.
Tomorrow morning, 8 a.m. morning briefing.
Bye-bye.
Bye. And people in the Zoom, I'm gonna call it today. So you know exactly that I don't really trade today. Markets are uncertain. I only placed one position on US30, but probably going to lock in soon. £500-600. Have a good evening. See you tomorrow at 8 a.m. on the morning briefing. Thank you so much.
Thank you so much, Thomas.
Thank you. Good night.
Bye bye. People in YouTube, thank you so much for tuning in. I hope you enjoyed the conversation, you enjoyed the live streams. Conclusion on gold, Vasim, leave it, mate. Don't force it. If you're trying to be desperate to make money, you're not going to make money. Markets are uncertain. Do not trade it. If I don't see anything, or if I see anything, I post it to my members. But now in YouTube, I would tell you if I see something, but nothing. That's either ways can go long or short. So try to be less desperate to make money. And be safe. Always manage your risk. And thank you so much, guys, for tuning in for the conversation. What else to know? Okay, if you want to join the Alpha FX community, link in the description below. We have a new shiny Discord server. I'm going to send the link into the chat right now. So invite people, copy link, and it should go up to your... So link to the new Discord server is just arriving into the chat on YouTube. You look to your right and it is right there. So the point counter, Hoptech, you can YouTube it. It's really simple to install. It's free, doesn't cost money. Thank you so much, guys, for joining in. See you tomorrow at 1 p.m. We're going to do another live stream. If you're interested to join in the community, link in the description below as well as in the chat. See you tomorrow. This is the Alpha FX.
Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.